The Market Week show is on, and coming up in this show, I'm going to give you commentary on the financial markets. Arby's going to bring analysis on the financial group, looking at Citigroup. Katie's going to bring you analysis on the energy stocks, looking at Chevron, Exxon, and the XLE. I'm going to come back and give you the spider sectors, and I'm going to look at 100 stocks in just a few minutes and show you how to do that. Matt will bring you multiple time frame analysis on the bond market, looking at TLT, the 20-year bonds. And then I'll come back and bring you the stock market analysis looking at the SPY for 1 to 3 weeks.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market, which began to struggle again just 2 weeks ago, continued to show a propensity to move down in the last week. An early rise came on news that Elon Musk had taken a 9.2% stake in Twitter, and what he says was a passive investment, which may actually go to 15%. And that big rally actually didn't last that long, because Tuesday stocks were moving down again, as all of the Fed heads seemed to be coming out very hawkish. In fact, Brainerd came out and said an aggressive drawdown of the balance sheet probably would be necessary. Now that balance sheet at $9 trillion. Also, the ISM came out and showed record inflation, at least as long as they've been keeping records since 2009, and the EU proposed tougher sanctions on Russia. The S&P 500 moved down 57 points, but Brainerd's comments, they really hammered the tech stocks, and the NASDAQ was down much more, 338 points. That was 2.4%, and we have seen the tech stocks turn much weaker. Wednesday was more of the same as the stocks moved down again, this time on the FOMC minutes, as many members actually were looking for half-point increases, and they would have liked to have seen that at the last meeting. They outlined balance sheet drawdowns at about $95 billion a month, which to the market seemed hawkish. But when you think about that, well, in 1 year, their balance sheet's going to go from around $9 trillion to somewhere just under $8 trillion. If you ask me, that's not aggressive QT, and it might have to be more than that. Their hawkish stance will probably be looked at in coming meetings, and don't be surprised if they get a lot more aggressive. Bullard actually agrees with what I just said, as he sees it's necessary for some 300 basis points increase in the Fed funds. Came out and said that on Thursday, and that weighed on the bond market again, which on Thursday, the bond yields went up to 2.65% on the 10-year, and then later in the year, got worse. Stocks moved down, but then recovered. They actually ended around up 20 after they were down very significantly during the day. Friday, well, bonds were down again. 10-year yields popped to 2.73%, and the techs were still getting the worst of it. The NASDAQ early in the day here on Friday was down about 1.4%. Then all of a sudden there was a move back to the upside as the buyers came back in. Also helping the downside was Boeing, which on its own has been very sick. And there was a news report that came out. I actually saw the video where a cargo plane had an emergency landing. It was 757. And then as it skidded in the runway and turned around, it broke in half. Well, Boeing has had huge troubles, as we know, and that stock was getting weighed down again today. But buyers did come back and try it again. The Dow moved to the plus side as there was a lot of buying coming in the retail and health stocks, and even the financials getting a rebound here on Friday. And here at midday, we have the stock market just, I will call it mixed right now, with the just edging to the upside, with the Dow the strongest index here. So with inflation very hot and the Fed having to deal with putting that out, the forest fire that they lit, and of course, in a real world, if you lit a forest fire, you'd be a criminal. And I keep saying, well, I think their actions are criminal. So between the government's insane throwing money everywhere at everything and the Fed's great experiment through 2008, besides it costing all of us a much more in our cost of living, they're in a horrible situation. They have to stop trying to save us, that's for sure. Inflation is roaring and the economy is slowing all at the same time. But they need to kill inflation. They need real rates to go up significantly to do so. If you can borrow, now mortgage rates have gone all the way up to 5%, but if you can borrow and buy a house or some real estate and pay 5% a year, but it's going up at a rate of 20% a year, well, you get the idea. It makes sense to do that, and that's why prices are going to have a hard time coming down. You might be thinking about, yeah, sure, we saw that back in 2007 and ended up with a housing bubble that absolutely crashed. Of course, things are different right now, so they say, and there is a shortage of homes, actually, and people are scrambling to buy them, and that's why inflation is getting embedded in the system. Okay, yeah, we're going to get some slowdown in inflation, makes sense, but not down to 2%. And we're in for a very aggressive Fed who has completely lost credibility, and they might be in this 2024, or even later, raising rates and keeping things tight because they have to deal with this problem again that they created. The stock market's going to suffer for all of this. They must kill the wealth effect. In fact, they have to get to a negative wealth effect. The markets, they're going to keep trying. You're going to still see the bulls trying to come in. It's pretty hard. They're really diehard bulls, and we see them trying to buy the market, as even happened today on Friday after it was down. But there are big risks ahead until all of that is purged. We've seen that so many times in history, and this time, with the market getting up to historic valuations, the purging is going to take longer time and going to be worse. And that's going to happen until this group of investors, which are most, that expect the market to survive and then move up again. Of course, it always survives, but they have to become very uninterested in the markets. And for that to happen, it's going to take a long time. We've been warning, these rallies are time for you to lower your risk exposure. For the week, here we are at midday on Friday, and overall, the S&P 500 down a little less than a percentage point. The NASDAQ and the Russell much worse, down 3 to 4%. The Dow about unchanged, but the Dow Jones Transportation down somewhere close to 6%. So they really took it. The last 2 weeks have been horrible for the transportation index, and that really does say something about the nature of the economy. And that index now is breaking down. So that's in really bad shape and setting up what we think is going to be a lot of trouble, of course, for markets going forward. Bond market absolutely hammered. 30 years down 6 points. That's a huge amount. The 10-year yields popped to 273. Right now, they're trading around 272. And the yield curve is flattish to slightly inverted. The 3s to 10s, 3 years to 10 years, about the same, trading right around the same. And the odd hump in the curve has the 20s above the 10s and the 30s. So that's your biggest inversion right there, is the 20s to the 30s. Gold market, gold rallies about $20 on the week. Silver around unchanged. We still think that correction, consolidation if you might call it, has some time to go. Dollar moving up again, up 0.3% as that safety bid continues to come in there. And our target we discussed this week with our members is par 50, 100.50 for the near term. Gold market down about 320. This is now turning negative. And we do believe that oil is, did I say oil? Yes, oil in a sell pop period here. I think every time it picks up its head, it's going to be moving down again. You could get all of our analysis on the futures markets every Wednesday in Future Speak when I do this 1 hour and 15-minute video where I teach the whole time. If you want to learn about our style of analysis or about markets, you got to watch Future Speak, members level 2, 3, and 4. Coming up, well, you have the whole team, as I said in the opening slide on this show, and you're going to see some just amazing stuff from the team, this analytical team, 4 of us here at askSlim, I'm very proud of. Do remember, go to askSlim.com, explore that website, and we have lots on there for you to see. If you're new, become a free member, and you'll be able to just get some of our stuff and, of course, be notified when this show comes out. And on YouTube, do subscribe to the channel. Click the notification bell, and you will know when we post videos. And do like this video. Give us a thumbs up, as that helps us. Twitter, follow us at askSlim. And for questions on our memberships, all of our huge offerings of education and analysis, write to Matt at askSlim.com. All right, this is a preview of a member video, Stock Sectors. You're going to see R.V. Ramachandran, one of our great cycle analysts here, as he analyzes the financial sector. This, again, is a member video. The analysis on the full video has 12 different financial stocks, and he's going to share with you right now the analysis on Citigroup.
So this one is a bit out of phase versus some of the other major banks that we have looked at here. However, you can see very clear cycles here, and we have really been annotating this chart for many years. You can see we have had a bearish cycle form here with a lower cycle low versus the prior low, then had a perfect failure versus this intermediate 50 to the 61.8, and then turned down and broke the low here at 57.59, which says that we are in a left-hand translation where the high forms early in the cycle, and you look for this to sell off really for the rest of the cycle and for rallies to fail. You can see we had a mid-cycle low due. This is all that it was able to muster is really a 2-week rally, and then has already broken that low. So we have the dominant cycle pushing down as well as the minor cycle. Again, super negative pattern. If you want to learn more about this overall methodology, definitely check out the cycle workshop. We have a special going on until April 17th. Now, the next key low is due here, 613 to 711. So that's the overall picture here in Citigroup. We're looking for a move to the intermediate term 100 at 46.32. And we have a 127.2 down here at 40.41. So overall, we'd be looking for rallies to fail and to see resolution on the downside.
Great work on that, RV. As always, thank you for bringing that. And again, you can see the full video by becoming a level 2, 3, or 4 member. This is analysis of the energy sector. Analysis of Chevron, Exxon, and XLE, the energy ETF. This is Katie Anagostos, so she's going to apply that analysis from info from our new cycle load timing tracker, which is now in beta. This is a great tool that we have, and Katie's going to demo that for you right now and use that information as she looks at this energy sector.
Hi, this is Katie with askSlim. We're noticing some possible short side opportunities setting up in some of the energy sector stocks on our focus list, namely Chevron, ExxonMobil, and the energy ETF XLE. of which Chevron and Exxon make up greater than 43%. So let's take a quick look at those charts. This is the weekly chart of Chevron, and we have been in this very bullish cycle and now starting to consolidate sideways. There's a weekly cycle timing window starting next week and running through the end of May. This is a period of time when we would expect this current cycle to make its low. Switching over to the daily chart, notice that this last cycle was very bullishly configured and then retraced down into the top of the support zone. Normally, under such conditions, we would expect the next cycle to be able to take out the prior cycle high. But this cycle and the next correspond with the timing window that we just saw on the weekly chart when we would expect an intermediate term low to form. The cycles are what we call in sync. In sync cycles in general are expected to show weakness, possibly failed rallies, even breakdowns. And notice that this current cycle is exhibiting some of that. It did not make a new high, and it has been struggling in the resistance zone. We're now approaching the daily cycle timing window, which runs from 411 to 421. Now, because this is the first of two cycles that are in sync with the weekly cycle timing window, we could get our intermediate term low in this one or the next one. The energy sector has been strong in general, so we're not looking for a downside collapse. As a matter of fact, the sideways price movement is telling us that there's downward pressure going into the end of the cycle, but also still enough upward pressure to prevent a significant decline so far. Looking at XOM, you'll see the same thing. Here is the weekly chart with the cycle timing window beginning next week. Notably on XOM, you will notice that the reversal scout, which is our momentum indicator, has flattened out somewhat more than on Chevron. And here is the daily chart. It shows price action very similar to Chevron, failure to make a higher high in this cycle, struggling in the resistance zone, and just moving sideways, approaching its daily cycle timing window. And finally, here is the weekly chart of XLE. Again, the cycle timing window begins next week. And you'll notice here, as with all of these symbols, that we're not projecting an enormous decline, only to the top of the support zone at about the 38.2% fib. That is around $69 for XLE. We're currently trading at 76.5. And XLE's daily chart is very similar to Chevron and ExxonMobil. Several weeks ago, we launched a new tool at askSlim called the Cycle Low Timing Tracker. It's designed to identify symbols on our focus list that are in these cycle timing windows when we might find reversal or continuation opportunities. But in addition to that, there is also a section where we identify symbols that are maybe not yet in the cycle timing window, but approaching it and expected to show weakness. Here are Chevron, ExxonMobil, and the XLE, all in the in sync section of the cycle low timing tracker. So Chevron, XOM, XLE all entering weekly cycle timing windows next week, and in the first of two daily cycles that correspond with that. So we'll be watching for some weakness and relatively minor corrections to the tops of their respective weekly support zones. Subsequent to that, those symbols will appear in other sections of the cycle low timing tracker to highlight those other opportunities as they come out of cycle low timing. Thanks for listening and have a great day.
Great work on that, Katie. Also, just fantastic work. Really proud of this team. I'm going to bring you right now some amazing analysis. Watch this. You just saw RV discuss financial stocks, and you saw Katie talk about the energy stocks. Let's look at how I look at a lot of stocks in a very brief period of time. As we look at the askSlim Market Monitor, I thought you'd find this very interesting as we look at our 4 proprietary indicators at 100 stocks. And I'm going to do this very quickly, as you will see. This is the askSlim Market Monitor running live. What this shows you is, if you look right over here, the XLE, the XLF, the XLV, looking at the top weighted stocks in each of those categories. And you can see here Exxon CVX, which you just saw Katie show you, and the XLE. And she talked about the fact that that group was very strong. These are listed in rankings, essentially, of sensitivity in the market, with the MCI being the one that has the least amount of sensitivity. It takes much more in effect the longer term aspects of the market, and the slim ribbon's a little shorter, or the OBI option bias indicator is even shorter. Reversal Scout is a little more sensitive than all of those. So we look at them all. Here you look at the energy sector, you will see basically it's all green. It's a very strong sector. There are some short-term corrections going on, as the Reversal Scout is showing you, but this really tells you that minor corrections are likely and then probably moving up again, as Katie talked about. Here you look at the XLF, and you can see that as Arvi had discussed, this is a very weak group. Look at these numbers in here as you look at the market condition indicator, red and very low numbers. These go to minus 100 all the way up to plus 100. You could see plus 86 here in Exxon. So this tells you that there are long-term components that are really negative, and that all of these things show you how negative this group is in the financials. So when you look at something you want to buy, well, you're fighting a lot of downward momentum when you look at that. Let's quickly look at a lot of other stocks and a couple of these other groups. Let's look at the XLV, the healthcare. You could see all of the strength right over here when you look at the market condition indicator, the MCI, the slim ribbon in great shape, all of those at very positive. Here you have a condition in XLV where you see this is orange. So that says to you that this has now reached the level of being extremely overbought. So you would look for some pullbacks in here, but still under very bullish conditions. And here you can see pretty bullish, the Reversal Scout. This one, the only one that has turned negative so far is Pfizer, as you can see. And Pfizer also is slightly negative on these longer terms. So that's not one that's really in great shape. XLI, the industrials, you could see the industrials quite negative, while GE is absolutely horrible. And look at this short term on a Reversal Scout, all moving to the downside, really negative. This just shows you how easily this can give you a great sense of condition. You notice this orange right here, UPS, this is becoming extremely oversold. So you would expect to get some kind of a rebound in there, but that would be under very negative conditions. Here's XLB, the materials. Let's just scroll this up right over here. You can see all of these. These are the heaviest weighted stocks in each of the groups. XLB, there's a lot of things in here that are actually longer term negative. Though Newmont, you can see, looks rock solid in the gold category there. And Slim Ribbon is giving you green, the option bias indicator, all saying you should be biasing your option positions to the long side. And here is one stock in here, FCX, that is giving you a short-term negative condition, and it's not great in the long term either, as you can see. So that's Freeport-McMoRan, maybe showing you that it's not quite as good in here when you look at that. Long-term conditions not great when you look at these materials, as you can see that. Next one is XLK, which is the tech stocks. And look at this. Look at all the long-term conditions, how negative. The worst one you can hear at minus 84 is Cisco when you look at that one. And you see pretty mixed conditions right in here. Same thing for the most sensitive Reversal Scout, as some of those are still in a positive condition and some of them in a negative condition. We had a market rally, but then they started to come back down. You could see the ones that turned red are really sensitive to moving to the downside. So that's a look at the at the text. Here's the communication, the newest of the groups, and you can see in here longer term, all really not in great shape. The T-Mobile probably the best, as you can see in the longer term. Looks pretty green all the way across as you see that, but a lot of red and mixed conditions here as you look at these communication stocks. And a lot of sensitivity to moving to the downside, as you could see here on the reversal scout. Not a great group when you look at that. And you look at the XLY and the XLP right down over there. You're looking at the consumer groups. On Amazon, of course, used to be considered in the tech category, certainly in the FANG stocks, at minus 40 here in red, gives you some pretty bad conditions for the longer term. But look at these over here: Home Depot, Lowe's, Starbucks. These are terrible. And you start to get rallies, they're going to give it up fast, and you could see that looking at it right there. Those are some pretty negative stocks. And XLP, when you look at these others in the consumers, some very nice ones you see in here. Costco, super strong in the long term. Walmart, super strong. And lots of strength right in here. Even with the market pulling back, these things are not pulling back at all. So it just gives you a great sense of the strength. There you look at 10 groups, 9 groups actually, and about a total of 99 different symbols that we looked at there in just a few minutes. And the askSlim Market Monitor is just a fantastic assortment of our tools put all together for you to see. And this is for our level 4 members if you're interested in that. And I think that you will, if you become a level 4 member and you load this up, you'll really be well informed. And you can put any of your watch groups in here once you have it to upload on the thinkorswim platform. Don't forget, thinkorswim is our preferred broker, and you can open up a thinkorswim account through TD Ameritrade, of course, the parent company, by going to the front page of our website. Just scroll the carousel over, click on that page, and please do open up your TD Ameritrade accounts right there on our site. Thanks for watching, and I hope you found this unbelievably informative. Now the analysis brought to you by Matt Serpe. He's going to show you multiple time frame analysis on the bond market. He's going to look at the 20-year ETF and really demonstrate to you the askSlim chart streams. This is some unbelievable stuff. Take it, Matt.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. In this brief segment, I'm going to highlight our askSlim multi-time frame chart streaming service. This service is designed for short-term traders. With this service, you'll learn how to apply our suite of custom indicators at multiple time frames to assist with determining key short-term timing windows, directional bias based on momentum, important support and resistance levels, how to monitor for extreme overbought and oversold conditions, and momentum divergences. This service includes 11 channels that we broadcast live each trading session. That includes the S&P 500, the NASDAQ 100, the Russell 2000, the SPY, the QQQ, IWM, GLD, SLV, TLT, XLE, and a proprietary index intraday grid for day traders. This proprietary askSlim service is streaming live each trading session and is available for our level 3 members and higher. Okay, let's take a quick look at a recent example of the service, looking at the symbol TLT, which we broadcast live each trading session. So the grid is made up of 4 chart time frames. We have our weekly chart, we have our daily chart, we have our 2-hour chart, and we have our 15-minute chart. Our methodology combines cycle analysis, momentum analysis, and swing high, swing low techniques, which are featured on these charts. All right, so let's take a look at how our multi-time frame grid suggested 2 key things. One is a bearish bias for TLT for the past several weeks, and also how the grid here suggested the downside risk was still high coming into this week, even though there had been such a steep decline going on in TLT. All right, so we're going to start over here on the weekly chart. And on the weekly chart, we have a momentum indicator, which we call our reversal scout. And the reversal scout is this band which shifts between green and purple. When it's green, it's positive. When it's purple, it's negative. And you can see here that back in December, the TLT shifted negative. Our reversal scout picked up a change in the momentum condition and has held that negative condition ever since. So that was a huge warning sign that the overall condition, the directional bias based on momentum on the weekly chart here had shifted negative. Another tip that let us know that the overall directional bias is likely to be negative and we would have continued lower lows and lower highs is based on our cycle analysis work that we do. And we utilize cycle brackets here to give us a visual depiction of the money flows so that we can see this price action play out on the charts. And we have a framework for that timing. And what we saw here in TLT, which gave us that tip that we were likely to have some continued downside price action for the past several weeks, was the following. The TLT made a cycle bottom here. Okay, and you can see that depicted by this prior cycle bracket here. And then we went into a rising phase. We are unable to get through the 78.6, which is a level that we look at, as well as unable to get past that prior cycle peak. And then we rolled over. And when we rolled over here, you can see that the TLT broke that prior cycle low. And that opened up the door for several more weeks potentially of downside price action. And that's really what we got here as TLT the following day had a little gap up or a little push up, and then it basically has collapsed and gone into a downside move ever since. So that warning here of that break of cycle support opened up the door for another few weeks here of downside price action, which is what we've seen. Okay, so now as we look at why was there indication through this chart grid that this week there would also be another period of risk. So if we start over here on the daily chart and we look at our another momentum indicators, we have two momentum indicators on here. We have a reversal scout, which again is that band. It goes from purple to green, but then we also have our slim ribbon, our custom slim ribbon momentum indicator, which has three exponential moving averages, and when they are on alignment to the downside, the candles get colored red, and when there's a positive alignment, then the colors get turned green, and when there is a neutral or mixed condition in the momentum indicator between the exponential moving averages, it will shift purple. And you can see here that back since this is going back to about January 20th, the slim ribbon has been negative and only a few days here of showing a neutral condition. So as we came into this week, we can see here again, we had this cycle breakdown. So there was all this time to fall, but we had a minor cycle low that came into place. And then we had a rally into the resistance right near that resistance zone to the top end here of the slim ribbon, which many times the slim ribbon bands themselves, the ribbons act as resistance when there is a negative condition, and when there's a positive condition, those ribbons will act as support. But in this case here, there was a warning that as we got up into the top end of the ribbon itself, you could see that another one of our indicators started to fire with negative signals warning that the dominant downside momentum condition was likely to resume. So that was an indicator. The fact that we had that cycle low breakdown was an indicator that this overall cycle was likely to finish negatively, where we were to, at a minimum, retest this minor cycle low, if not break down below that. So as we came into this week, we had those warnings, and the biggest factor was the fact that there was a lot of time still left in this declining phase, which would suggest that we probably did not see the lows. And when we came in then to this week, you can also see here on the 2-hour chart, as the TLT tried to rally and actually shifted the momentum positive on the 2-hour, the daily chart held its negative momentum bias. And when the 2-hour chart resumed its negative bias here with the reversal scout turning negative, that was a signal that the dominant momentum was likely to resume. And because there was still time left in this declining phase, the likelihood of a retest or break of that prior low was high. That's exactly what we've seen this week. And now what's going on is that today we came into some key support, intermediate fib extension zone that was identified previously. And it's likely here that we're going to get some likely chop in this key support area, and probably one more dip down to the downside as the timing window is still in play here as we then shift into the bottoming process. And then and soon here, probably as we get into the third week of April, we'll likely see a pop starting to happen in the TLT, but it's got a lot of work to do to shift this overall negative condition positive. Right now, we would need to see a push above the minor 78.6 fib around 131.57 to reevaluate this overall negative condition, which is still intact. And we are watching again for some further downside or choppy price action, likely one more dip to this key longer term 78.6 or near here. And then we'd look for a consolidation and then a likely rally starting out here, a new rising phase in about the third week of April. So that's how we use our multi-time frame grid to get a sense of the directional bias for the short-term condition, intermediate conditions, as well as key price levels on the upside, the downside. So all of that is laid out on these grids, and it's a fantastic way to, at a glance, get a sense of the overall technical conditions. We do supply a glossary and usability guides that are included, which go into deep detail around our custom indicator studies, and we provide best practices for identifying favorable trade setup conditions. So that's all I have for today. Remember to go to askSlim.com for more information regarding our premium memberships, and you can write to me at matt@askSlim.com for special trial offers. And remember that this service is included in our level 3 service, and we wish all of you great trading.
Fantastic information, Matt. Thanks for all of that. Coming up is the stock market analysis, but first, learn about our cycle analysis workshop. This is the askSlim Cycle Analysis Workshop Special, and you can see there's only 1 week to go. I learned this method of analysis starting about 47 years ago. Then I started to write this, and it took 2 years for me to write this workshop and over 6 months to produce. This is a workshop with 21 video modules, plus many of our tools for text videos that are connected to that. You will be watching for hours and hours and hours, and you're going to learn an unbelievable amount. This is online lifetime access, and you don't need any special platform. You'll never look at charts the same way as you did before. I mean, this will change everything for you. You'll be improving your directional decisions. You're going to be projecting in time and price. So few styles of analysis do project out in time, and you're going to be fascinated by this. We're also going to do a live event on May 10th for workshop members, where you'll be able to have plenty of time to study this now and then get with us, and we'll be able to help you, and you'll be able to ask questions at that live workshop, and we'll be doing some teaching at that time too. Matt has a demo reel with little pieces of clips from most of these videos. He could share that with you if you ask him. This special just now in the final week is a $400 discount, just an amazing savings. Premium members at any level save an extra $100. So if you're not a premium member, you can join first and then only pay $797. That's amazing. Most other workshops would be in the thousands and thousands of dollars, and none of them would cover this comprehensive type work in cycle analysis. Write to Matt at askSlim.com, Matt at askSlim.com for info, and he will send you the special link. If you have any questions, he'll be able to answer those for you. That is the Cycle Analysis Workshop Special, just 1 week left. All right, here is the stock market. We're going to look at the SPY, that is the ETF on the S&P 500. We're going to take a short-term view of that. So we're going to switch over to the charts here, and I think this will be very clear to you, the style of work that we do comparatively. Here is a SPY chart, SPY, as you can see, on a daily chart. And there's a little bit on here that we bring in our own special way, but you can see it's just a candlestick chart, And here is the slim ribbon on there. There is a moving average right over here, which is the 89-day moving average. Our key moving averages on the daily chart we look at are the 89, as you can see here. And the center of the slim ribbon is the 13 EMA. Slim ribbon is made up of 3 different EMAs, the 8, the 13, and the 21. You can put this on your charts 3 different ways. Either download it from our site and upload it to Thinkorswim. TD Ameritrade is our preferred broker, and we encourage you to open up an account through our website. And down over here is the slim ribbon PO, which is the momentum signals that comes from the slim ribbon. And you can see positive signals that are coming right over here, suggesting that the market is going to try to move to the upside again. When it was red and negative, you were getting negative signals, and it was moving down. So this is a standard chart that a lot of people look at with some of our proprietary indicators on there. But now when I switch it over to cycle analysis, you're going to see it just lights up with information that we put on there for our members. Let's talk about what we have right here. On the bottom are cycle brackets. These are a drawing tool, and it helps us understand money flows. As money moves in and out of the market, the shape of the cycles really helps us understand money flows. You can see in here there's a minor cycle, an intermediate, and a dominant cycle right there, and those cycle harmonics are 12, 24, and 36 days. Each of them is made up of a large harmonic family that we call there. So what we're looking at here in our analysis is that the first cycle came in here. It was about 14 days long. It was just slightly longer than the average. Cycle analysis has ranges of time in there, and there are slight variances. And this being at 14 is not that far off. This was 14, 11 days, 11 days, 10 days, 12, 12, 14. Those are all those small minor cycles that you can see. And then this other one right over here is the intermediate one, and the big dominant one right over here. When they're all lining up together, they're all going to be going and correcting on the downside. You could see the slim ribbon telling you it was negative. The slim ribbon PO went neutral for a couple days, but basically was showing you negative through the whole period. And now right over here, it's turned positive and beginning to give you upside signals. So this would imply that the market would be moving up. However, see this little green line right over there? That's this minor 14-day cycle. It broke that already. And what that is suggestive of the fact that even though we're getting positive momentum signals right here, that this is likely not to be able to move up, and that all of a sudden this will turn blue or neutral fairly soon. The slim ribbon is starting to move flat right over there, as you can see. So the bulls have to prove themselves right now. Let me zoom in a little bit more, and you can get the important information right here as we look at just this last cycle that we're in. So there's that 14-day low, the breakdown right over here, and what looks like a little flag forming in here, and the flattening of the slim ribbon. Still positive momentum. It looks to us, since this broke down under here, that this is going to continue in a correction. That would take you out to this level, this time frame out over here into early May for this big dominant cycle. There's a potential for some lows over here in mid-April. We talked about this mid-April as an important time in the past. These vertical lines give you the timing for that minor low there, and this for the more dominant lows right in here between these two vertical lines. What we're looking at is the potential for this minor decline to keep going out over here until early May. Now here's your supports right over here, your 38.50 and this should actually, reach 61.8. The levels right over here are at 444.50. 439.50, and this one I'm just going to remove because that one is not correct, and that comes down over here at about 433. So the levels that we're looking at potentially to move down, 439 makes some sense here, in this level right over here, as some continued correction with a potential down to 433. If it gets down to 423.40, that's what we call our reevaluation level. And that would warn us that this rally right over here, which was a big upthrust, with just a huge amount of rally of 11% in 11 days, that would warn us that that's over with. There's no energy left in the market to continue that out over here. If we hold in this support range that we see right over here, right around the 439 down to about 433 area out in the early May, then we would expect that we could test this level out over here. Breaking above 457.83 would be positive. In other words, this minor peak right over there being broken would be a very positive occurrence for the short term, and that would then say that something had changed in here. So right now, the highest probability looking at this and looking at all of these cycles and all of these important numbers is that the bulls are going to keep trying in here but struggle for a while and get into these supports over here and then begin to move up again. We had talked about for the longer or intermediate term that we thought that this rebound in a bear market would continue out into May. And this is what it looks like right in here, where it had the big rally, the consolidation into support, and the next move there out into May. So for the next 1 to 3 weeks, which this is really short term, we expect it to come down into this period here and then make a bottom, but not break down. Again, under 423.40, that is a warning. If it gets here under 410, well, you've got a crack going on. It's really a bear market resumption. We don't think that it's a high probability right now. The highest probability is some downward chop in here for the next few weeks and then beginning to move up in this period again. While this is overall a short-term bullish look to it, I still do believe that exists in a bear market. And all of this is simply just a consolidation of what was the beginning of it in this big downward leg that you had right over here. So we'll look for just this continued downward chop and then potentially an opportunity to catch another move to the upside here out into May. That is the short-term view for the stock market this week, and I hope you found that fascinating. Remember that the askSlim Cycle Workshop Special only has 1 week to go, and that you could save $500 by, if you're a member, become a member, and learn about all of this analysis that we do for just $797. I mean, just an amazing price. That's the end of the show. I hope you found it absolutely filled with illuminating information for you. Please do go to our website, become a free member, YouTube, subscribe, click that bell so you know when we do put different videos up. There's lots of them. You can watch them in the member video playlist that we have there on YouTube. Make sure you give us a thumbs up. On Twitter, follow us at askSlim. And write to Matt at askSlim.com for any information on anything that I showed you in here or anything that was shared by our just amazing analytical team. That is it for today. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.